Hello, welcome back. Just going to do a quick video now on our trading times and time frames and how we go about setting this up. So we've already talked about the indicators that we've got, and we're on the Australian dollar, United States dollar daily chart right now. So 20 period simple moving average and the 100 period Bollinger Bands there. So when you're doing your analysis, first of all we analyse the 20 simple moving average, and it's clearly on a down slope right now, so we mark our template as the T20 short, which it already is, and what we do from there is we need to draw in all relevant support and resistance levels around your key area. So anywhere where you've got a high and a low, that's where you want to draw in your support and resistance levels. Okay, so the bottom of this candle, bottom of this candle, bottom of this candle. The bottom of here was subsequently the top of this one's. Support becomes resistance. Once you don't need to draw the support and resistance levels all up here because that'll take weeks to get up there. Next thing you do is find the relevant move. So as you can see, I'll take that off. So we've made a move down, clearly been making lower lows, lower highs, so it is downtrending. Now on this day it threw up a nice dramatic spike there. So we would say that the price is going to retrace a little bit before continuing on downwards. It's probably going to come up towards find support at the 20 simple moving average. So we're going to find the levels where the price is going to retrace to. So we know how to draw the Fibonacci's now. So on a downtrend, from the top to the bottom. If it's on an uptrend, it's from the bottom to the top in the direction that it goes. So we're looking for the areas of possible reversals. So as you can see here, made the contact of the 38.2 Fibonacci, just touched through this resistance level, but we'll have a look at it on the hourly chart. You can see here a little Fibonacci on this level, because you can see it came down, retraced, so we can draw another one in from this level down to the bottom here. So we've got two. We'll change to the hourly charts now. Zoom out a little bit, and you can find this was a low, so we don't need to draw one in there. There was a high there, it's a little bit more relevant, so we'll move that down just so it actually comes into contact with this, the high there. And you can see also it just missed out by a few pips, but it would have been a support level for these little lows here as well. So it is quite a significant support and resistance level, which is good. Any other moves that you see, we've seen we drew the Fibonacci in here. What I'll do is I'll just refresh all this. So we can see there was a smaller move here from the top to the bottom, and we'll also draw in the longer term one. We can see the price reacted off these two Fibonacci levels. Draw in the low at this candle, because that was a low before the price retraced and then broke through it. So that's a support level. Support possibly going to come resistance. Zooming into the current time, just an hour or two ago, it was during the non-farm payroll announcement. I wasn't going to trade it. I don't particularly like trading in news events, so I tend to stay out keep my positions out because it is volatile. But as you can see, on the hour before the non-farm payrolls, excuse me, the price came up. It was 12 o'clock in the afternoon GMT, half an hour before the news announcement came out. Price came up, just touched the very top of the Bollinger Band, possible range, and also the 38.2 and the 61.8 of the smaller Fibonacci that we drew in here. You can see that number there. So we had a nice confluence of the Bollinger Band, 2 Fibonacci's, and the price also made a false break through the resistance level here. We were looking at 57 pips, plus a few for the spread because it was selling. I wasn't there at the particular time, so I never put up a trade, but what I would do, if and when this price actually retraces back up to this level, you could enter at a more favourable rate. I'm all about minimising risk, so if the price came up, retraced to about 50% of this candle, then I would enter a trade. So I'll clear this chart again. You can keep, when you're trading, keep all the Fibonacci's and support and resistance lines up on the chart. I'm just doing this for demonstrative purposes. So let's just say 50% of that move. So if the price comes up to 0.785, I could place a pending order in there just to make it completely hands free, or I could enter in on the 38.2 retracement of that move. Now I didn't want to take it all the way down here because it's a news whip, so this was just a extremely high volatility there. So where the candle closed and the candle opened, I'll make that the move in this instance. So you could place a pending order, right click, you could place a sell limit, or you could just watch the charts manually, whatever you please. That will get you in at a nice reduced rate. You could get in at about 40 pips. Next support level is the 100 period simple moving average, which is 62 pips. It's not so great. It is 1.5 times the amount that we would be risking, but the bottom of the range is 160 pips away, and you can clearly see the Bollinger Bands are nice and flat, which is signifying we are in a range still. So because of this news event on the non-farm payrolls, it's actually looking pretty positive for the US dollar. I do expect the price to come down. So in this instance, wait for the retracement and then sell. Profit target would be the bottom of the range, and always expect a breakout afterwards. So that's how we go about setting that one up. Let's have a look at another one. So we'll do the New Zealand dollar, Japanese yen. We can clearly see my template is set to the T20 short because the moving average is angled nice and steeply downwards. Now as you can see, we're in a retracement phase right now, which is all good. So what do? We put the Fibonacci's in from the top to the bottom of the move. Put another Fibonacci in on the intermediate. Got one there, and there's also another little move here. We'll draw that in, see where it goes. Now it's exceeded beyond the 78.6 Fibonacci, so I would say the Fibonacci's in this retracement are void. Seeing that it's passed through every one of the Fibonacci levels. So I will draw a resistance support line in there, and in some cases we may need to zoom out to find other relevant levels. I'll just have a look here. You can see at the bottom there that would be a support line. The price is reacting, so I'll put that in, although it did break through it. We can always have a look. You can see there, support, resistance, resistance. So we'll go to the hourly chart on this respect and see what the price is doing. Now you see the price rushed up, didn't quite contact the Fibonacci's. There's no clear support and resistance levels in, apart from this move right here. That was a high, so put that in so you can find the support and resistance levels on the hourly time frame as well. So that's why we do it on the daily and then do it on the hourly chart. So you can see the price has reacted, but because of this large significant move that it made, it's very unlikely that we're going to get a bearish engulfing candle which we could trade. If it did, it would be too large. On the same respects, if the price consolidates around this level and gives us other indications that it might reverse, we can maybe get in a smaller stop loss if the formations are right up towards this support and resistance level. We're near the top of the Bollinger Bands. It could reverse. Price is going up, stochastic is going down, a little bit of negative divergence from this. We'll talk about that in advanced trading techniques. So it is throwing up little signals that it could potentially go down, but as of right now there's no trading outcome. So one thing I missed out on the dailies and the hourlies, just refresh that, is trend lines. So whatever trend lines come up, draw them in. I had to make that from point A, point C, so A, B, C, and this was the D move. You can see there was other trend lines in here which have been clearly broken. So that was A, B, C, D. Now that's been broken. It's been broken because it's very, very steep. So what we're doing now is waiting on this retracement up before we can sell. So back to the hourly chart, find out where that trend was. So the proper way to draw the trend line is locate the current high, or inverted if it's low, pull back. As if this was a D, you need to find the C, so you need to come backwards and find your low point. So that's a low point and that's a low point, so we can actually draw two trend lines in. This one which was clearly broken, but the price still continued on upwards, and we have the other potential one here. Okay, so that's our possible trend lines to trade from on the hourly. Let's go back to, this was the currency we were doing before, the Euro US dollar, was it? Let's draw some trend lines in, all the long term trend lines, all the trends in between, and then let's do the steep most current trend lines which have been clearly broken. So mistake some traders may make is, I'll just delete these a minute. Just give me a second. a lot of mistakes some traders will make is they always draw a trend line like this. This is the wrong way to do it, because the only way we know this is an actual C is when it makes the D formation. So like I said, on the long trades, we have to start from the top and work your way back. You have to start from the lowest low and then work your way up to find the C level. So D, C, B, A, B, C, D, or A, B, C, D. So this trend line has been broken. You can see that the price broke out, it came back down, tested the support of it, made another little rush up. Now this is having a little bit of a news whip from the non-farm payrolls, but there's no telling where this is going to go. But in respect, I would say it's going to make a nice retracement before continuing on downwards. So tested the 23.6. We have been in a very steep downtrend. I would say that this would retrace a little bit more before continuing on downwards. This is the daily chart. Could be wrong. We do trade on the hourly and we look for the opportunities in there. And then once again, draw your trend lines in here. That was current because that is the high. Now it's been a bit messy, a bit choppy. When it's like this, the trend line may not be the dominant factor in these trades. It could be a mix of the trend lines or the moving averages or the support and resistance levels, as in the support and resistance horizontal lines. So that's why we do a mix of the 3 or 4, because there's many very varying factors that come into play. So it's about you spotting the opportunity on which one actually arises at the time, and then using the other fields for your take profit levels, other possible bounces, because the prices, they just bounce from one support to the other resistance and vice versa. They just keep bouncing. Whatever one is dominant and prominent at the time, it will make a reaction to it, and then that's when we can capitalize on it. That's why trading is a little bit of guesswork, because if it worked bouncing off and moving averages every single time, it would be easy to spot. Or if it bounced off every single support and resistance level, it would be very easy to trade. Or if it bounced off every single trend line, it would be very easy to trade. But in reality, trading isn't easy. We need to be very agile in what we do in our trading techniques. So that's why we use these the Fibonacci's, trend lines, support and resistance levels on our charts. Now the support and resistance levels can be the horizontal lines, or moving averages, or Bollinger Bands. Okay, that's why we use them all. Now let's talk about time frames just now, or trading times, sorry. So it's better to trade the highest liquidity times of the market being open, which is during the late Asian session and during the whole European session and the beginning of the New York session. Now that's anywhere from 6 AM GMT to 6 PM GMT, anywhere along this time. So depending where you are in the world, you might want to draw one of these little charts for yourself. I'll put mine online so you can have access to it, but you can find these scattered all over the internet. I would trade anywhere in amongst these times. Now things do quieten down a little bit at the end of the New York session. Why? Because day traders are kind of winding down. They do most of their trading in the first part of the day. before they go to lunch. So from 8:30 and 9:30, blah blah blah. So things start to slow down at the end of the New York session. Plus, you've got to consider that the European session, it's not just London, it's France, it's Germany, it's Sweden. There's a lot of places caught up in the European time frames. And the reason we say 6 a.m, yes, it's the tail end of the Sydney and Tokyo trading times. But if you're in at 7 o'clock, you can get some nice action, and especially in the tail end of the Tokyo session, tying into the European Open, as you'll find when you open up the charts and look at 8 a.m. GMT sharp, there's usually nice moves to be had. So if you're in Europe and you're up at 8 o'clock in the morning, it's definitely a good time to trade. So get up before, do some analysis, and be ready for the 8 o'clock open. So your trading time on the daily will vary depending on where you are in the world, but although it's best to select these trading times, the system can be traded around the clock. It's a 24-hour trading system, and it doesn't matter where you are in the world, it can still be traded. I still miss trades. When you look at the charts, there'll be trades coming up and they could be happening at 2 o'clock in the morning. So it's a very active trading field, so when I'm in bed, people on the other side of the world are up actively trading. So don't worry where you are in the world. There's always opportunities everywhere else. So just a little note on the trading about time frames. We only trade on the close of the hour. So it's 29 minutes past 2 right now, GMT, and the next trading time I should be thinking about is 3 o'clock on the dot. I don't trade anywhere in between. I don't go to 30 minutes and wait for a close. I don't use a 15 minutes. That's the reason we trade a 1 hour chart, is because that's where most of the institutions trade off. Now, people don't trade halfway through the hour unless they're on 5 minutes and 15s, but they're very volatile and noisy. If you want a little bit of consistency in your trading, just trade at the top of the hour. So 8 o'clock, 9 o'clock, 10 o'clock, etc, etc. Don't place your trades 2 minutes before because you think the candle's going to do this, because if it might look one way, like for instance this candle, big bearish engulfing candle, let's just say it looked like that 3 minutes before the top of the hour. Within that 3 minutes a lot of things can change and the price can come back up and not make a candlestick formation. Now that would be an invalid trade and you shouldn't do it. So wait for the close to roll over and then place your trades based on that candle. Do not trade in between the times. Okay, so that's all for this video. Thanks for watching and I'll catch you in the next one. See you then.